All right, buckle up, everyone. We're diving headfirst into the world of Tata
Be
Motors.
good gear for them.
We've got their 2023-24 annual report hot off the presses, and we're going to break it down piece by piece to figure out what's really going on with this automotive giant.
Lots to cover.
It's almost like they've got a finger in every pie,
Yeah.
you know? Traditional engines, EVs, even those hydrogen fuel cells we keep hearing about.
And let's not forget about Jaguar Land Rover. They're a global player now, with all the complexities that come with that.
Right. Speaking of global, how's the overall industry landscape looking these days? I mean, what are the big trends and challenges Tata's up against?
Well, the report paints a pretty optimistic picture, actually.
Go ahead.
Seems like the Indian economy is holding strong despite all the global headwinds.
That's good news for Tata, for sure.
Definitely. Especially since the Indian automotive industry is booming. The EV sector in particular is on fire.
How much are we talking here?
Get this. EV sales in India jumped a whopping 70% in fiscal year 24.
70%.
That's insane. Yeah, it's a massive surge. But all that growth attracts competition naturally.
I can imagine. Who are they up against in this EV race?
A bunch of new players are jumping into the Indian market, launching all sorts of shiny new models. But even with all that competition, Tata's holding their own.
How so?
They're still the top dog in the Indian EV market, commanding over 70% market share.
Wow. So they're leading the charge in India, which is huge on its own right. But then we also have to consider their global play, particularly with Jaguar Land Rover. What's their game plan there?
Well, it's clear from the report that they're going all in on electrification for Jaguar Land Rover. It's a bold move considering the traditional image of those luxury brands.
That makes sense, though, if that's where the market's heading.
Yeah, they're even building a new facility in the UK specifically to produce an all-electric Range Rover. That's a big statement.
Speaking of big statements, let's unpack Tata Motors' overall business model for a minute. What are their main moneymakers beyond just selling cars?
Sure. I mean, selling vehicles is obviously their core business. They're the leading commercial vehicle player in India and a major force in the passenger vehicle market.
Makes sense.
But they're also diversifying. Their recent IPO of Tata Technologies Limited is a good example.
Interesting. So they're creating multiple revenue streams.
Exactly. Not putting all their eggs in one basket.
Smart move. Now, we all know Tata has a reputation for being pretty eco-conscious. How does their annual report address that? Are they walking the walk when it comes to sustainability?
It's not just lip service, that's for sure. Sustainability is embedded in their business strategy. They even highlight this framework they've developed called TATVA.
What's that all about?
It's basically about integrating circular economy principles into everything they do. Minimizing waste, using resources more efficiently, making their products more sustainable throughout their entire life cycle.
Sounds impressive.
Yeah.
But at the end of the day, investors want to see cold, hard numbers, right? What were some of the key financial highlights from the report?
Well, first off, their group revenue for fiscal year 24 was a whopping 4,037,928 crores.
Wow, that's a lot of crores.
Yeah, talk about substantial growth.
So revenue's up. But what about innovation? Are they actually investing in R&D?
Absolutely. Their R&D spending has seen a significant jump. Clearly, they're serious about staying ahead of the curve, especially in EVs and sustainable tech.
Good to hear. And with all that revenue and R&D investment, I'm guessing their market cap is pretty healthy too.
As of March 31st, 2024, their market cap hit a cool $43.57 billion.
Right, so they're raking in revenue, investing in R&D, and have a massive market cap. But what about actual profitability? Are they making money, or are they just burning through cash?
Don't worry, they're making money.
Phew.
Their profitability is definitely on the rise. And we see this reflected in their EBIT margins, which have improved significantly.
That's good news for investors. And what about their cash flow situation?
Well, this is where it gets interesting. Their passenger vehicle and EV business is actually free cash flow positive. Yeah, they're generating more cash than they're spending in that segment.
So they're not just profitable. They're also generating cash. That's a strong position to be in. But let's be realistic. Every business faces challenges, right? What are some of the potential roadblocks Tata Motors has identified in their report?
Well, they've pointed to some key risks, particularly those stemming from climate change and geopolitical events.
Those are some big ones for sure.
Yeah, they can have a major impact. Climate change can disrupt supply chains, increase costs, and even influence consumer behavior.
And geopolitical events, those can throw a wrench into anyone's plans.
Exactly. Think trade wars, political instability, things like that can really shake things up.
So how's Tata Motors preparing for these potential disruptions?
They're not just sitting around waiting for the storm to hit. They're actively diversifying their supply chains, investing in climate-resilient technologies, and using risk assessment tools to try to stay ahead of the curve.
Proactive, that's the key.
Right. And speaking of proactive, they're also looking beyond their home turf. They're expanding into new markets, like Nepal with their Tata Ace EV.
Smart move.
Yeah.
Got to ride that global EV wave. So Tata Motors is making waves both at home and abroad. It's clear they're not just reacting to industry trends, they're trying to shape them. But who are the masterminds behind all these moves? Who are the key players driving Tata Motors' success?
Well, the annual report specifically highlights Shailesh Chandra, the managing director for passenger vehicles and EVs.
He sounds like a busy guy.
He's certainly optimistic about the company's future, and his leadership is a big part of their success in those segments.
And who's at the very top steering the ship?
That would be Mr. N. Chandrasekaran, the chairman. He's the one setting the overall strategic direction. And then we have Mr. Girish Wah, the executive director, handling the day-to-day operations.
So a solid leadership team at the helm. But enough about the people. Let's get back to the money. How is Tata Motors planning to use its resources, and how does that tie into their overall valuation?
Well, their R&D spending is clearly focused on sustainable mobility solutions, things like hydrogen engines and fuel cell technology, to supplement their already impressive EV portfolio. They're betting big on the future of green transportation.
Which aligns perfectly with their overall brand image, right?
Exactly. But it's not just about R&D. They're also putting a lot of money into expanding their sales and service network.
Reaching more customers, providing better service, makes sense.
And don't forget about their international expansion. Remember that new underbody facility in the UK for the all-electric Range Rover? That's a huge investment.
Definitely a statement of intent. But are all these investments just random splashes of cash, or is there a cohesive strategy behind them?
Oh, there's a plan for sure. Take their partnership with Gratis, for example.
What's that about?
They're working together on a gigafactory in the UK. It's all about securing those critical battery supplies to power their EV ambitions. They're thinking long term.
It sounds like they're building a solid foundation for the future. But who actually owns this house they're building? What's the shareholding pattern looking like for Tata Motors?
Well, Tata Sons PVT Ltd, which is the holding company for the entire Tata Group, is the main promoter. They hold a significant stake.
So, still very much a Tata family business at heart. But what about the public? How much of Tata Motors is owned by everyday investors?
Public shareholders own a mix of ordinary shares and ordinary shares, and each type of share comes with different voting rights. It's kind of a delicate balance between the Tata family's control and the voice of public investors.
Interesting. Bit of a power-sharing arrangement. Now, what's this I hear about them delisting from the NYSE? Weren't they all about that global expansion?
Yeah, that was a pretty significant move. It seems to suggest a shift in strategy. Maybe they're focusing on other markets that are seeing faster EV adoption.
Makes you wonder where their long-term global ambitions lie. But before we get too deep into that rabbit hole, let's switch gears and talk about those related party transactions.
Yes, the always interesting section of the annual report.
Exactly. So what are the key takeaways from that section?
Well, there are a lot of transactions between Tata Motors and their subsidiary companies, things like sharing resources, providing services, that sort of thing. It's all laid out in the report.
So they're keeping it in the family, so to speak. But are there any red flags we should be concerned about?
Well, the report explains the rationale behind each transaction, which is good for transparency.
Transparency is key, especially when dealing with related parties. Got to make sure everything's on the up and up.
Agreed. Now, before we get into the nitty-gritty of those transactions, let's take a quick breather. We'll be back soon to dive deeper into their financial statements and see what other hidden gems we can uncover.
Sounds good. Can't wait to dig into those numbers and get a clearer picture of what's really going on behind the scenes at Tata Motors.
All right, welcome back to our Tata Motors Deep Dive. Last time, we got a feel for the industry, Tata's business model, and a high-level look at their financials.
Yeah, it's clear they're firing on all cylinders, especially in the EV space. But now it's time to get down to brass tacks and really dissect their financial statements.
Time for a little number crunching. We're going to look at their profit and loss statement, balance sheet, and cash flow statement to see what the numbers really say about Tata's financial health.
Okay, let's start with the profit and loss, or P&L. What are the key things we should be looking for here?
The P&L gives us a snapshot of how the company performed financially over a specific period. like a report card for their business, how much revenue they generated, how much it cost them to operate, and ultimately how much profit they earned.
So how'd Tata do in fiscal year 24? What grade did they get?
Well, their top line is definitely something to write home about. As we mentioned, their group revenue for fiscal year 24 hit a remarkable 4,037,928 crores, a huge increase compared to the previous year.
That's a lot of revenue. But it's not just about how much they're making, right? We also need to know how much they're spending.
Absolutely. The P&L breaks down their costs into different categories, like material costs, employee costs, and other operating expenses. Analyzing these costs helps us understand how efficiently they're running their business.
So what kind of trends did you notice in their expenses for fiscal year 24?
One thing that jumped out was a significant increase in R&D spending. This shows their commitment to innovation, particularly in electric vehicles and sustainable mobility. They're putting their money where their mouth is when it comes to the future.
I like to see that. They're not just resting on their laurels. What about other expenses? Anything concerning?
Employee costs also went up, which makes sense as they're growing their workforce and investing in new technologies. Not necessarily a red flag, but something to keep an eye on as they scale up.
Makes sense. So revenue is up, expenses are up. What's the bottom line? How much profit did Tata Motors actually make?
After all the expenses, Tata Motors reported a profit of 31,807 crores for fiscal year 24.
Wow, that's a huge jump in profitability. So the P&L is looking good. But now let's shift gears to the balance sheet. What can this tell us about Tata Motors?
The balance sheet is like a financial snapshot showing what the company owns, their assets, what they owe, their liabilities, and the difference between the two, which is their equity.
So it's a way to check their overall financial health. What's the balance sheet saying about Tata Motors?
Let's start with their assets. This includes things like cash on hand, inventory, property, plant, and equipment. Analyzing their assets gives us insight into their operational capabilities and how well they're using their resources.
Any interesting highlights from their asset side?
Well, their cash and cash equivalents have gone up significantly, which is always a good sign. It means they have plenty of liquidity to fund their operations, invest in new opportunities, and handle any unexpected financial hiccups.
So they've got some cash to play with. What about their other assets? Anything noteworthy there?
Their investments in property, plant, and equipment have also increased, which aligns with their expansion efforts. Things like that new facility in the UK for the all-electric Range Rover, they're putting their money into growth.
Building for the future. But we can't forget about the other side of the equation. Their liabilities. What do they owe to others?
Liabilities represent their financial obligations, like loans, payments to suppliers, and other debts. Looking at their liabilities helps us assess their financial risk and whether they can handle their debt payments.
So ideally, we want their assets to be bigger than their liabilities, right?
Exactly. That means they have a strong financial position.
What's Tata's situation looking like?
Their borrowings have remained relatively stable, indicating they're managing their debt responsibly, although they do have some long-term debt to consider.
Right. Always good to keep an eye on that. Overall, would you say their balance sheet looks healthy?
Yeah, definitely. Their assets are bigger than their liabilities, and their equity is strong. This tells us they're in a good position to support their ambitious growth plans.
That's reassuring. Okay, we've covered the P&L and balance sheet. Now, on to the cash flow statement. Why is this one so important?
The cash flow statement tracks the movement of cash both in and out of the company. It shows us how they're making money and how they're spending it. And in business, cash flow is king.
Makes sense. So, what does Tata's cash flow statement reveal?
Good news. Their cash flow from operations is robust, meaning they're generating plenty of cash from their core business activities. They're also investing heavily in their future, as we can see from their capital expenditures.
They're making money, and they're spending it wisely to fuel growth. What's the net effect on their overall cash position?
Their overall cash balance has grown significantly thanks to their strong operations and strategic financing activities. This gives them the financial wiggle room to pursue their growth strategy and weather any economic storms that might come their way.
That's great to hear. They've got a nice cash cushion to work with. Okay, so we've looked at the three main financial statements, the P&L, balance sheet, and cash flow statement. But how do we really interpret all these numbers?
That's where financial ratios come in. They're powerful tools that help us analyze a company's performance and compare it to others in the industry. Think of them as benchmarks.
Okay, so like financial yardsticks to measure how Tata is doing compared to their competitors.
Precisely. They give us insights into a company's profitability, liquidity, efficiency, and solvency, painting a more complete picture of their financial health.
So what are some key ratios we should be looking at when we analyze Tata Motors?
There are a few important ones. Profitability ratios like gross profit margin and operating profit margin tell us how well they're managing costs and generating profit from their operations. Liquidity ratios, like the current ratio and quick ratio, measure their ability to pay off their short-term debts, making sure they have enough cash on hand to cover immediate expenses. Then there are efficiency ratios like inventory turnover and asset turnover, which show us how effectively they're using their assets to generate revenue. Finally, we have solvency ratios like the debt-to-equity ratio, which give us insight into their long-term debt management and how much financial risk they're carrying.
It sounds like there's a ratio for just about everything. But what's the big takeaway from all these ratios? What's the overall story they're telling us about Tata Motors?
Overall, the ratios paint a pretty positive picture of Tata's financial standing. They're profitable, they have strong liquidity, and they're managing their debt well. Plus, they're showing signs of increased efficiency, meaning they're getting better at using their assets to generate revenue. Of course, it's always important to look at these ratios in context, comparing them to their past performance and to industry averages.
Right, got to make sure we're comparing apples to apples. We don't want to get too excited about one number without seeing the bigger picture.
Exactly. But based on our analysis, we can confidently say that Tata Motors is in a strong financial position. They're generating impressive revenue, managing their costs effectively, and making smart investments for future growth. They're well equipped to face the challenges and seize the opportunities ahead.
Sounds like they're firmly in control, navigating the ups and downs of the auto industry with both financial smarts and a clear vision for the future. But let's not forget about the people behind the numbers, the ones who ultimately shape Tata Motors' direction. In Part 3, we'll delve into the world of the Tata family and other key stakeholders who hold a stake in Tata Motors' success. Stay tuned. All right, welcome back. We've crunched the numbers, analyzed the financials, and now it's time to meet the people behind Tata Motors.
Yeah, let's put some faces to the figures, so to speak. We know Tata's in good financial shape, but who's calling the shots?
Right, so let's talk about those promoters, the Tata family. Their legacy is basically intertwined with Tata Motors' history. They hold a significant stake through Tata Sons PVT Ltd. What's their story and what are their main interests?
Well, the Tata family's history in Indian business goes way back, like to the 19th century. They've built this massive empire, not just in cars, but in steel, software, hotels, you name it. And their name is synonymous with certain values: integrity, social responsibility, and a commitment to India's development.
So it's not just about profits for them.
Not at all. It's about a bigger vision, a sense of purpose.
How does that play out in Tata Motors' strategy today, especially in a world that's so focused on sustainability and social impact?
It's woven into everything they do. Their focus on electric vehicles, their push for a circular economy, all their community development programs, it all aligns with the Tata Group's philosophy of responsible business.
It's like their values are trickling down from the family to the entire organization. But what about other stakeholders? Who else has a say in how Tata Motors is run?
Well, beyond the Tata family, you have the public shareholders. They own a combination of ordinary shares and ordinary shares, each with different voting rights. They make their voices heard through things like annual meetings.
So it's a balancing act, right, between the Tata family's legacy and the influence of public investors.
Exactly. Now, speaking of balancing acts, let's talk about risk. Every business faces challenges, no matter how successful. What are some of the big ones Tata Motors is watching out for?
Yeah, what are they worried about?
Well, climate change is a huge concern for the whole automotive industry. It can disrupt supply chains, drive up costs, and even change consumer behavior.
Makes sense. People are definitely becoming more eco-conscious.
Absolutely. And then there are geopolitical events, trade wars, political instability. Those kinds of things can really throw a curveball at any global company.
True. Those are some big external factors that are tough to control. But Tata's not just sitting back and hoping for the best, right? What are they doing to manage these risks?
They're being proactive, which is smart. They're diversifying their supply chains to reduce reliance on any single source. They're investing in climate-resilient technologies to reduce their environmental impact and prepare for a future where climate change is a major factor. And they're using risk assessment tools to try to anticipate and plan for disruptions.
So they're taking concrete steps to address those challenges head on. Now let's talk about how they're using their money. Where are they investing to make sure they keep growing and stay ahead of the game?
Research and development is a big focus, as we saw in their financials. They're especially interested in sustainable mobility solutions. Hydrogen engines, fuel cells, expanding their electric vehicle lineup. They're all in on green transportation.
Which again aligns with their overall brand and values.
Exactly. But they're also putting resources into expanding their sales and service network. They know that reaching more customers and providing a great experience is key to building a strong brand.
Makes sense. Happy customers are loyal customers.
Right. And we can't forget about their international expansion. That new facility in the UK for the all-electric Range Rover is a huge sign of their commitment to electrifying their luxury brands.
It's a big bet, but it seems to be paying off.
Yep.
How are all these investments affecting their overall valuation?
Well, as we discussed, their market capitalization reached $43.57 billion as of March 31st, 2024. This tells us that investors are confident in their future prospects and that they're making the right moves to create long-term value.
So they're spending wisely, innovating strategically, and investors are taking notice. It's a good story to tell. But before we wrap up, let's go back to those related party transactions we talked about earlier. It's important to understand what these transactions are and why they matter.
Absolutely. The report highlights significant transactions between Tata Motors and its subsidiaries, things like sharing resources and providing services within the larger Tata ecosystem. They're very transparent about these dealings and emphasize that they're all conducted at arm's length, which means they're treated as if they were with an unrelated company.
So it's all above board. Transparency is key, especially when you're dealing with related parties. It builds trust and makes sure everyone's playing fair.
Exactly.
Well, here we are at the end of our deep dive into Tata Motors. It's been quite a journey.
It has.
We've covered a lot of ground, from the industry landscape to their financial performance, their sustainability initiatives, their global ambitions, the Tata family's influence, and even those related party transactions. We've really gotten a comprehensive view of this automotive giant.
We have. And what's clear is that Tata Motors is at a turning point. They're navigating a rapidly changing industry, embracing new technologies, expanding their reach, and they're doing it all while staying true to the values that have made the Tata name so respected.
It's an exciting time for Tata Motors. They're not just adapting to the future, they're actively shaping it. And for you listening, we hope this deep dive has given you some valuable insights and sparked your own interest in this company that's driving innovation and sustainability in the automotive world.
Absolutely. Remember, the journey of understanding business and investing is never over. Keep learning, stay curious, and keep an eye on how Tata Motors continues to evolve.
Couldn't have said it better myself. Until next time, keep those engines revving.